Welcome back to the channel, everyone. In today's video, we're going to move on from the mini-series in the past 3 videos, and I'm going to be teaching you a strategy that I use that in time will be quite simple to follow, and you'll be able to see it work in the charts and hopefully make some money with it in the future. And this strategy will be a bit different to some of the previous ones that I've done because they were predominantly SMC strategies that are quite common, but I wanted to get them out to you, whereas this strategy is something that I don't see many people use, and it's something that I use quite a lot. And while it does use SMC concepts, it does use liquidity, which most people attribute to an SMC concept. It isn't entirely the same as what you might have seen before, and it's going to be a bit of a different setup, but I'm going to teach you it and how I use it, and then I'll show you a couple of examples where I took trades. So I'll start with going through the textbook setups. If I just move over here, and I'll show you kind of what you're looking for. So you're looking for a range. I'm going to be using the 1 hour time frame, should have mentioned that. It might work on other time frames. I use it on the 1 hour because it's quite good to get some intraday market action that normally produces some ranges that you can see get liquidity grab below the range or above the range, and then make your move from there. So what you're going to be doing is looking for a range on the 1 hour, something like this. It doesn't have to be, all equal highs and lows, but you're looking for a range, and then you're going to want the range to break. And from here, this is where it moves from SMC to, I guess, retail methods. But what you're looking for is a retest of the previous high to then take price back upwards, ideally to this new high. You can take it further if you want, but you don't have to. And then the key thing to note is that this high is what has been retested. Obviously, I didn't draw it perfectly there, but you're going to be looking to buy from this retest zone, stop loss below here, and target here. And this is the kind of general setups. Obviously, there's ways to refine it. For example, you don't need to get the retest. You can look for supply zones, demand zones in this case, anywhere in this area. So there might be a supply zone, a demand zone, at the very bottom, in which case you could get a high risk reward by buying there, stop loss below the low, and targeting up here. But there could also be a demand zone somewhere in there, which you could target from. And so instead of trying to get the lowest point to buy from, you're going to look for which has the highest probability of producing a move. Obviously, if there's a clear demand zone here, then it's likely the price will actually come down into it before taking off again. And then the other main thing to note is that liquidity grab was here, and that the whole range liquidity doesn't have to be grabbed. So previously you might have seen me draw setups like this where you've got your range and you're looking for a break for a push up, and then you go to the supply zone, or in this case you'd be looking for a retest of that high before going up again. And here the liquidity of the whole range was the liquidity of the whole range was broken rather than just the most previous low. And obviously the setup on the right is going to have a higher probability of playing out, and so these setups will be better. What you can do is risk more. You can risk like 0.25% here, risk 0.5% in a trade like this, but that's up to you. That's going to be your discretion. But the main point is that even when the whole range doesn't get broken, you can still get setups where just some liquidity has been grabbed. It means lots of institutions were buying at this point here. They didn't feel the need to take out liquidity here because maybe there wasn't as much resting there, or they just wanted to get in at this price. We can't know their reasoning, but all we can do is look at the charts and try and work out what they're doing. So this is basically the textbook setup that you'll be looking for. It'll be the same, just flipped for the bearish setup. But the main points to look at are you're looking for some kind of range. That will be a bit discretionary. I'll show you some examples of what I've called ranges, but it will be discretionary, which you'll have to develop over time, your ability to look at the charts and notice ranges, but you're waiting for it to be confirmed by the break of the range. So you don't need to spot the range while you're in it exactly, but once you've broken out of it, you need to be able to look in hindsight and say, yes, that was the range, and now we've broken out of it. And once you've seen that, you need to either decide on whether there's a demand zone or supply zone within this area here, from where the liquidity being grabbed to where structure was broken. If there was a demand zone in there or supply zone in the other setup, then you can look to get in from there, as long as you're consistent with that. And if not, if you'd rather be a bit more simple, you can trade from the structure. The final point being, if you get a setup like this, obviously this is your typical SMC setup that I preach about, range, clear liquidity grab, and then break the structure. And this setup will be of high quality, so have a high chance of winning. And so you can even just trade these setups if you want, but it's good to maybe just trade both and learn the setup on the demo account and then get trading live. And if you have any questions, message me, but we'll get into the charts now. So the first trade I wanted to talk about was on something USD CHF. So if I just delete this zone here, if you see here, you can see there's a range. You know, we've got price going up, but it never breaks out this range, and it looks a bit like one of those flag setups that you might see on the retail chart pattern gurus pages. You can see a range. You know, you've got, even if you ignore this point here, you've got the low there, and then you got some range there, some ranging here. You can just see this area is a bit rangy. So if I just delete these, what you can also see is that after a while we get a close below this point here. That's the key thing, a close below this last point of structure, and you can see the trend going up and down. This is the point, this is the low before the high, which then gets broken, and price holds below the low, as opposed to up here, where yes, you get a close above this high, but immediately get pushed back down. And if you just look closer, you get one bullish candle up, taking out the Asian high. So something else to note, if this happens, it can increase the probability of the setup playing out. You get the Asian high swept, you get some liquidity swept, and then multiple consecutive bearish candles. And so on a higher time frame, in the 2 hour, there is actually a clear supply zone. However, it doesn't get tapped, and so that's why sometimes when trying to trade from supply zones, maybe price will come back at some point, but you know, price has just left it. And so trying to always target the highest risk reward setups, trying to get the most premium and discounted prices, isn't always the best thing to do, because it can lead you to take FOMO and just get in and out and lose lots of money. If we go back to here, once price is broken out of this range, we can look for supply zones, and there is one up here, so you could go for that. If that's what you want to do consistently, you won't get as many setups, but they will have higher risk reward. But what else you could do is just place your sell limit, which is what I did on this low. Stop above the liquidity grab, and then target this structure down here for 2%. 2.2% it was in the end, and it played out nicely. Sorry, I should have said when I got triggered. So I didn't actually place the limit until we held below this point for a while. So at the end of the day, on the Tuesday, I didn't place my limits. And you can even wait for the Asian session to start, because then you see there's some Asian liquidity above the high. But place your limit there and stop here with targeting this structure over here. And it did play out after a while. But a different way you could trade this as well is by looking, you know, in the day after this setup. You could try and go short somewhere in this session, maybe on a lower time frame. There likely would have been some setups maybe on the 5-minute in here, if you have a strategy that works on that. And so if you had actually gone down to the 50-minute time frame, then you would have seen these two supply zones that you could have got in from after this point had been touched. The first one you would have lost on, just got tapped out. Then another opportunity presented itself, price was pushing up, took out liquidity above the zone, and then pushed down, and then retouched the zone, and you could have taken this move down, which would have been a very nice risk reward trade, just looking at the market price action in the day after you'd seen the setup take place, where the high's taken and then price pushing down. So this is some way you can use it if you prefer lower time frame trading with confirmation, and hopefully that's helpful. So then just to recap this trade, we got a range, we got liquidity break above here before closing below the other side of the range, and then we waited for the day to end, in this case, just for some candles to stay below this point, and then we placed our sell limit here, stop loss above the targeted structure, and it triggered and then played out nicely. Obviously it won't all the time, but we're only going for like smaller risk reward than your typical SMC, where maybe you're targeting like 5R, 10R. Sometimes you will get trades that are like that, but not always. It depends on how far the structure is and where you want to target. You can target where you want, and that's up to you in the end, but this is how I do it. And the key thing to note here is that yes, maybe the top of the range was here or here, and those points weren't taken out. The liquidity grab didn't, shoot up and then shoot down, but it did take out some Asian highs and a point of structure here where there was liquidity resting. Took it out and then reversed, showing big bearish movement. So that's the first setup, and then the second setup was on USD JPY, so I'll get into that now. So the second setup on USD JPY was earlier this month, and it's somewhere on this chart here, so if you want to take a minute to have a look for yourself, you can find it, then you're already on the right track. So if you haven't paused the video, do it now, because I'm going to get back into it. So the range that I saw was somewhere in here, this kind of area, going back to over here, and you can see we got broken out of it here. But before we broke out, we had a liquidity grab over here. Again, not only was this point of liquidity taken out and absorbed, but also the Asian highs. So that's something that occurs quite a lot and will give you confidence in your setup when that happens. So once we had closed below this candle, and not only just closed, because we could have closed and then shot back up, which would have been another liquidity grab, but we closed below and then held below, and that's the important thing. Yes, it was nearing the end of the day and so momentum was dying out, but even at 4 or 5 o'clock in the UK, there was not much movement and we weren't going back up. We shot down and nothing was absorbed. So then this is the case where if you had left it for after the Asian session, you wouldn't have been able to get in on the limit here, but I mean, you could have just entered after the Asian session, you would have got a higher risk reward, but sometimes that won't always be the case. And again, you could have looked for a setup in here. There's some, probably on a 5-minute, maybe 15-minute, you can get some setups and then take price down later in the New York session. But if you just waited for candles, maybe the day to close, you can place your limit, stop loss above here, and target some structure down here. This one didn't play out, unfortunately. You could have targeted anywhere. There's this Asian low over here that needs to get taken, so that's a key point that might get taken. So if you targeted that, only a 1.5%, but it depends where you want to target. Just over time, you need to make sure that the strategy is profitable the way that you trade it, because it can be traded many ways and everyone will trade it differently, which is the thing that you can't just copy someone else's strategy, unfortunately, because everyone trades it differently and everyone sees the market differently. You need to find what works for you. But something else in this trade that you could have done that I noticed but didn't take was this supply zone here. Did actually get respected. Maybe it got taken out there, but what you can do, as I said at the start of the video, you can place your limit here and still keep your stop loss above the liquidity grab in case the institutions also want to take out any stop losses above this supply zone. And again, in this case, if you targeted here, would have been 2%, and if you had targeted here, you would have lost, but 3.5% on a trade. If it had played out, which sometimes it will, and it's not too bad. And you can even just get this to find your direction for the next day. Once you see that this setup has occurred, in the next day you can go to the lower time frames and get a setup in here, take the market and just target these Asian lows, and you'd be able to find probably some high quality, high risk reward setups in here, but whatever suits you. So hopefully this strategy has helped you learn a bit more about forex, and hopefully you can go away and look at the charts and try and implement this. If this is something that you like the sound of and you like the look of and understand why it works, because liquidity has been grabbed, institutions getting in, and you're just trying to get in on a pullback at some point. You don't have to try and predict where the market's going to pull back to. You're just getting in from a set point structure and then taking the market down. And so if you have found this video helpful, then please do leave a like and subscribe to the channel, and join the Discord group if you want to be part of a community where we share trade ideas and just chat with each other, give help. But thank you for watching, and I'll see you in the next one.